understanding where we stand in our economy, and why we all seem to be struggling to make ends meet. What these economic terms and political jargon really mean. Educating ourselves is job number one. Like and subscribe. The $1 Investor. 1. Gross Domestic Product, GDP, growth. The U.S. economy grew at an annualized rate of about 4.3% in the third quarter of 2025, according to official estimates, showing solid activity from consumers, exports, and government spending. Forecasts suggest moderate GDP growth around approximately 2% for 2025 to 2026, reflecting slowing investment and spending pressures. GDP growth measures how fast the economy is expanding. Higher numbers mean more goods and services are being produced. 2. The federal deficit. In the fiscal year 2025, the U.S. federal government ran a deficit of about $1.8 trillion. That's the gap between what the government spent and what it collected in revenue. When measured as a percentage of the economy, that deficit is roughly about 5.9% of GDP for 2025. A deficit happens when the government spends more than it takes in, and the U.S. has run large deficits in recent years. 3. National debt levels. The total U.S. national debt, all borrowed money the government owes, was roughly $38.4 trillion as of late 2025. Of that, about $30.8 trillion is held by the public. The rest is internal government borrowing. Measured relative to the economy, total debt is near or above 100% of GDP, a level that historically signals high debt relative to economic output. Debt/GDP ratios over 100% mean the country's debt is larger than its total economic output, not unusual among advanced economies, but still important for long-term fiscal sustainability. 4th, interest costs on the debt. Interest payments on the national debt are growing quickly. Estimates for 2025 suggest about $970 billion in interest costs. As a share of GDP, those interest costs are projected to reach about 3.2% in 2026, one of the highest shares since the early 1990s. Interest payments are also a substantial share of federal revenue, possibly above 18% by the end of 2025. Interest cost is the amount the government pays each year just to service its debt, and that cost has been rising as rates and total debt increase. Like and subscribe.